Welcome back to another week and also another month, everybody, because today is Monday and is the 1st of September. So welcome. I hope we have a wonderful week and also a wonderful month ahead of us. Now, there are some things that will shake the market this week, coming from a pretty busy week, I would say, from last week. Now heading into a fresh month, a fresh new look of the week. There's definitely lots of bits and pieces I want to chat with everybody today. But also don't forget that every Tuesday to Thursday, so that is Tuesday, Wednesday, and Thursday, we have the webinars from 4 to 5 p.m. So the webinars run for free. You don't need to pay anything, and plus, if you join the Telegram group, you get also notified whenever I post a blog, that is every day, and also the link for the Zoom meeting for the webinars on Tuesday, Wednesday, and Thursdays. So don't forget to join us. Join me now on the Telegram, and see you there. Now, we will start the week tomorrow already with some of I would say volatile movements, and that is going to be the CPI for Europe. Then we're going to have the GDP for Australia on Wednesday, and then also the Global Services PMI and the non-farm employment change, ADP non-farm employment change on Thursday. And then on Friday, as everyone knows, first Friday of the month, we're going to get the NFP. So we're going to get the non-farm payroll, the unemployment rate, and the average hourly earnings. Okay, so these are the three big ones that's going to be out pretty soon. So let's go a little bit deeper now into those releases and what I'm expecting from them. And of course, during the week, I'm going to be posting other videos talking about the NFP. As everyone know, the last NFP was a disaster, was expecting to be 130, 120,000. It came up to be 73,000. So a big change from the consensus to the actual, and that disrupt the whole market, okay? So that being said, let's work our way towards Friday, and then of course every day I will be saying a little bit more, and of course have more information about those releases. Cool. Now, going to tomorrow, Tuesday, we're going to have the CPI for Europe at 7 p.m. The consensus is expecting a 2% from the previous of 2%, so no changes into that. I do believe that at the moment, how we are going with the CPI, with Europe, Europe is more like of a what are they waiting for is to the CPI to get out of the plateau and actually go down to 1.8, 1.5% to continue to reduce the interest rates. Being into that sense, the market know they are on a conjunction of hold and wait for some period until we don't know when. So they're not gonna do anything stupid, let's say, and just cut the rates now for the population to have better rates, but they will wait for inflation to actually cool back down, the labor market to cool back down even further, okay? Now, that being said, the next point is with that, the CPI maintaining at the 2% target, and also the ECB, the European Central Bank, maintaining the rates around where they are at the moment, we're most likely going to have a 10-week line of the euro strengtheners until the end of this year, and that's where I'm seeing the potential for the euro dollar to go at 120 by the end of this year in December. Okay. Now, that being said, if we go a day further on Wednesday, we're going to have the GDP for Australia. We don't have yet a consensus, so most likely we're going to have tomorrow or a little bit earlier on Wednesday. But the previous was 1.3%. With the inflation that we have at the moment, in my head, it's a bit of a tricky one. But in my head here, what I'm thinking is, for them to have an inflation release like last week of a higher inflation at 2.8, they need to do a production so the society could buy it, could spend it to generate inflation. So with that being said, what I'm expecting is actually that the GDP will come a little bit higher than the previous, because you know what I mean? To generate inflation, we need actual spending. To spend, for someone to go and spend, they need to have products to buy. And whenever there's a manufacturing, whenever there is a growth on the domestic products, we have a growth on the GDP. So that's what I'm expecting, a bit of a tight bit growth of on the GDP. On Thursday, we're going to have the Global Services PMI. The expectations are to no changes. And then the ADP, non-farm employment change. The previous was 104,000. The expectations are now 71,000. So that's really bad. It's around 34,000 less than what was before. The consensus is still the actual. It can be previous, or it can be as consensus. So we have to wait and see how this will go. My expectations is maybe at 71,000 will make much more sense than 104,000 as the previous. So let's hope to be, right. On Friday, in the last day of the week, that's when we're going to have the NFP. This is a very, very important NFP, because we all know, we're tired to know, in a sense, that the Fed will do a 25 basis point cut into September. And that's 16 days from now. The 17th of September is when the Fed will have the FOMC meeting, and they will come up with a decision. 25 basis points in, completely priced in, as we know, on the CME Fed Watch 2, but everything can change that. We still have 16 days, and everything can happen. A lot of things can happen actually in 2 weeks, okay? So if we have the non-farm payroll much higher than 74,000, let's say above the 100,000, the average hourly earnings above 0.3%, so meaning that the population is working and the population is getting paid for that work pretty well. So those two things mean that the population thinks they can spend now, and if they spend, it generates inflation. If it generates inflation, rates has to be maintained higher for longer. So if it comes above 100,000 and the average hourly earnings come above 0.4, what I'm looking for is then a reduction on that 25 basis points possibility of a cut, and generates a higher yielding scenario for the US dollar. As of right now, we can see that the US dollar is decreasing, and also the short term of the bonds, the 2-year yields, they are pricing a pretty high chance of those cuts. It's pretty priced in a sense. It's a 39 basis points priced in already. So let's hope and see if that comes actually true. Now, if it comes into the consensus, no changes, we already know. If it comes even below, there's even higher probability of the Fed cutting 75 basis points cut, doing a 75 basis points cut in total for September, October and December, the next 3 months, okay? Now, the unemployment rate, we know that there is a possibility of going to 4.4%, as what Jerome Powell has been saying to us. The previous was 4.2, and the consensus is now 4.3. So between 4 to 4.4, it's on the range, and it's widely expected. So nothing too big would happen if it comes at 4.4 or 4.3%, okay? So that being said, I'm still pretty bearish on the US dollar. For some reasons, I still believe that the labor market is cooling off. I still believe that inflation is cooling off either. I still believe that the Fed will do a 50 basis points cut in the next 3 months, as widely expected by majority of the market, I would say. And I'm pretty bullish on the euro, so I'm aiming for 120 on euro dollar by end of this year. So that's pretty much it that is going to happen this week. I hope I could make it clear. But also, if you have any questions, bring those questions tomorrow or Wednesday or Thursday into the webinar. And make sure to don't forget to subscribe to this channel and give us a thumbs up and share this content with your friends. And also join the Telegram, that the link is on the description. Thank you so much, everyone. Have a great week ahead, and I'll chat to you tomorrow, or I see you in the webinar. Bye-bye.